Right, it's been a long time. I have not updated in a while. If you've been looking on my um if you've been looking on my actual channel instead of my trading videos, then you'll see that obviously um because of we've been moving about, I haven't been able to really film trading videos. I've been trading um quite a lot. I've been trading every single day. I've lost a lot of money, I'll be honest, because I've been trading oil, especially during the volatility and the tensions between Iran and US. Then that's also caused a lot of losses. But we are back on track now. We have the money back, and we're focused on consistency now. I'm also no longer trading oil like I was, because I think I made a video on that one. Now we're only trading gold. So we're gonna go over some setups because I had some pretty good ones yesterday. I'll just get yeah, that's the one. Okay, right, perfect. So obviously I haven't really updated it since, and I stopped trading yesterday. It is now Saturday, so the market's not open today. But we're gonna go through fair value gaps basically. So I want to go through possibly, I can't remember which one was my entry. It was here. I think I entered some positions here. Okay, because if we see here, these wicks did not actually fill this fair value gap. Was it this one? Yeah. And so I was thinking, okay, we wait for it to fill. It did fill it, and then it continued going down. So I had one position over here, one position up here when it tapped the top of the fair value gap, and then it just started consolidating. Then slowly it started crawling up, but I did exit my positions early just to avoid the big losses like I've been taking recently. I did not want to see one of them because I think that would have tipped me over the edge. But on here we have some other stuff. So you can see how these work. I think I saw one yesterday. Bear with me. There was one, I promise. Was it? Fuck, I found one with so many on it. Maybe it was 15-minute time frame. I'll take a look at 15. It could have been this one. Yeah. Okay, so if you look here, you see obviously fair value gap is 3 candlestick pattern. So it's measured in a bullish market, then it's measured from the top of the first wick all the way to the bottom of the third wick. So it's this gap here. You can see this candle perfectly fills it there, and then price continues higher. So it's a continuation confluence used to kind of push the price higher. So you know that if this gets filled and we see a reaction, price will continue higher, and then you can target previous highs or like these fair value gaps. I probably would have had my take profit. I was doing I probably have one position there, only because this these fair value gaps 15-minute, and we have this one as well. Obviously these ones got a hit. So we look here, we see that it completely disrespected this fair value gap, and then it tapped into this one, and then price shot down. So there must have been a lot of resting sell orders there. And then we have some more down here as well. So we have fair value gap there, 5-minute one there, and I know there was another one somewhere. This one. So as you can see again, it was only a small one, but price went down, filled it, and then pushed price higher, and it does the exact same thing again. I noticed this is about the gold market, is that it works very technically instead of oil, which basically just moves up news. I'll find another one. And plus, it doesn't just move on fair value gaps. So I noticed it moves a lot of high and lows where liquidity is lying. So here, this will, when price reaches here, I know 100% that price will move down. and you can also see it's kind of working off support and resistance. So I did take some very good entries yesterday. So my bias was bullish because that was what the daily bias was. So I'd wait for the price to come around here. I'd enter one smaller position there, and then another bigger position at the bottom. And when I saw a reaction, I'd open the third position, and that's it. I think 3 positions, that's kind of where you draw the line. Any more than that, it starts to get a little bit more complicated. And I was taking my profits at a very good point as well. So on 1 second. Okay, there we go. So I was taking my profit at previous highs because I noticed just below actually, because I noticed sometimes it would come up to maybe around there and then it would push price down a little bit more. So I think having take profit around there is probably the best way it can be. And so let's take this for example. Obviously I know this is already played out. I'll go here. So obviously we see liquidity there because that's a low, 15-minute low. And we have another one there. Obviously we shouldn't get hit. So we swept this one, formed a bearish fair value gap, and then this liquidity gets swept, and this, I think this was a 5-minute low as well at one point. This was swept, and then it pushed price high, creating an inverse fair value gap, which got disrespected. So I would have probably, after sweeping this, I probably would have entered around there because a lot of it just goes off wicks. So when I enter a small position there, price goes higher a little bit, and then I would have waited for price to go down. Maybe I might have entered another one down here at a better price, and then after I see the break of structure, which was not this candle, and I think that would have been it, probably 2 positions. But it kind of just depends on how it is, because a lot of the time it's in the moment, and then I make my decisions. And there's one more thing, I've created my own concept. So I realized a lot of the time in bearish trends, buyers will push the price up so it closes in a bearish candle, but it doesn't have the opportunity to form a fair value gap or tries to avoid it. So when it gets closer to liquidity, it can push price higher without the risk of having lots of resting sell orders at these price points like fair value gaps. So I don't know if this is already a thing, but this is what I noticed and I came up with a name for it somewhere. I wrote it down. I think it was something like Wick Manipulation Compression or some bullshit like that. But it actually works really well for me, and it's harder to see when the candle's already formed, but actually in the moment you kind of do see it. Last minute, bang, they'll push it higher to avoid making a fair value gap, which is actually smart. And it's kind of one thing I use to my advantage, especially when trying to trade reversals. So when I'm predicting a reversal, that's mostly how I trade. So reversal, support, and resistance. I do enjoy trading those because they're very predictable and you kind of notice patterns over and over again. But I'll go on to my embarrassing portfolio. There was something else on here as well. Can't remember what. Okay, this one I broke even because this was obviously, you can see it was as near market close and Friday was yesterday, and I realized, yeah, I'm not risking this, so I tapped out early on that one. These ones were good ones, but a lot of the time I've noticed because of oil and how bad it's been to me, I'm exiting my positions without actually waiting for it to hit the stop loss. So I am being slightly skeptical in the markets just because I've been stopped out really badly. So you can see I'm taking good profits. I made $70 yesterday. Obviously 2 small losses there, a few more there, but for most of it it's green. Lots and lots. Because I'm just trying to figure out a strategy and get used to actually trading gold. So these are the losses which I was talking about. So these were stupid positions, so I must have shorted at the bottom, expecting price to continue going lower, and then it just completely reversed. And this was when oil just went all the way down, and it completely messed me up. So that stopped me out there. This one's even worse. So I think it will be 240. These were just stupid ones. So I bought, and then obviously the whole news about the ceasefire possibly and all that shit. Yeah, it completely stopped me out then as well. Obviously I hit all these take profits because I was starting to get a hang of oil, and I was getting good at oil. You can see it's just mostly green. So I was making like maybe 100 a day at least. You see two quite big losses there. Then I know there was 1,000. There was 1,000. You can see it's just all green. So I do. Okay, it's not actually letting me go down anymore, which is probably a good thing because that was embarrassing as fuck. But that will do. I don't want this video to be too long, so I'm gonna end it here because it's already 11 minutes. But I'm gonna try to keep up with the trading content a little bit more, trying to get some trades on gold next week, and also stay posted for the vlogs that are coming. I've already got maybe 4. I've got 4 out already now over the last few weeks, so go look at them. I'm filming one more today, which is a day in the life. That's it for now. Have a good one. See you in the next video.